Mic check, mic check. Hey everybody, welcome to Trading Capital. It is May 10th here on this lovely Tuesday evening. Another crazy session in the markets, just some whipsaw price action. The markets have no idea where it wants to go. The bulls wanted to bounce, the bears wanted to go lower. I'm in the camp that we still get a favorable bounce on the back of consensus estimate numbers for inflation. If it comes in anything below the current inflation rate of 8.6%, then I think the markets rally. If it comes in higher, there might be a little more downside to go. But looking on the S&P 500 here, we have broken this channel. Now we haven't confirmed below it. Just like this occasion here, you pierced below it, but you were saved. So now you've had 2 consecutive days chopping on support. You eventually want to see a bounce off this level. If you keep chopping on it, the odds do favor a more of a breakdown to occur because it's known as bearish consolidation. So we definitely need a bounce sooner rather than later, and I feel like it's going to happen once we get all the economic data, or the most important economic data, out of the way tomorrow on Wednesday. So we have inflation numbers, we have gas and oil, natural gas inventories, oil inventories. We also have a bunch of Fed talk. There's tons of Fed speech tomorrow. But based off of the markets in support being oversold, I do favor bounce. Now, where do we bounce to? Probably the center point of this trend line, and then we'll have to reassess as we go. But if for some reason we break this support, there's a little bit of minor support over here around the 387 mark, and then there would be another major level of support right around here. So you'll have your minor support and then your major support. But due to the oversold nature, if we flush into this, this will be a decent support level to trade against, in my opinion. Flipping over to the intraday basis, let's just take these lines away. You can see that we're not that far from support, but basically the markets are favoring a move up, in my opinion. You are still kind of having a little bit of a bullish consolidation off this low, almost like this cup formation, but it has not triggered yet. You'll have to break out of this neckline over here for your cup and handle formation to basically trigger, and that'll take you for a direct move all the way up to here, this gap fill. And then there is a secondary gap fill up here. So one of the reasons why I think we move up is because you have 2 of these gaps that should pull the price up there in the short term to at least fill it. So if you notice the trend that happened back here, we made a gap, sold down, rallied up, filled that gap. Gap down again, making another gap here, sold all the way down, bounced, came back, rallied up. Made another gap here, made another gap there, and you made a new low on the charts, just like you did with each and every one of these occasions. And I think it's due for a, even if it's a short-term bounce, whether or not we break out of this high, I do think we do, but we'll just take it step by step, day by day, and we'll have to reanalyze the price action. Congratulations on the winners today. We covered 3 trades. We covered our SBAC short for 7.87%. We covered our Mosaic short for a beautiful 7.38%. And then we also did a lovely day trade in Upstart, which I will pull up the symbol right now just so we can see it and analyze the stock together. Upstart has been demolished but has had an amazing bounce off of the lows. Forgive me for all my day trade lines and trend lines here, but we banked 16.68% in Upstart in as little as 2 hours. So congratulations, that's how the beautiful day trading works. And whenever I see an amazing day trade opportunity that I think you swing traders can execute, I don't hesitate to get you involved. And certainly Upstart was an amazing trade. We've actually rebought into Upstart again. And so this, just to run you through this trade. So this was the sell-off, and then this is all your pre-market selling. And then you made this move all the way up when the market, pre-market, you're making this move up here. And then when the markets opened, you had this sharp move up off the lows. We sold at this wick high here at 38.29, netted a beautiful profit of over 16%. and then we let this thing crash and we started to accumulate again. And because I've started to accumulate this stock, because if you look at how deep of a decline this happened or occurred here on Upstart, it is truly significant. I was just talking with a member about this bear flag pattern that was going to break, just like we saw in Bitcoin, just like we saw in NET. The stocks have a common theme. When you start seeing a number of stocks forming the same patterns and the patterns are being triggered, it favors that these stocks are going to replicate what the other stocks have done. You saw NET has dropped 30-40% after triggering this bear flag. Bitcoin has dropped 25% after triggering its bear flag. Now Upstart Holdings, it lost, I believe, let's just throw a measurement tool. So from the gap down, it fell 62%. From its highs back here in October of 21, so not that long ago, it's fallen 92% from the highs. So if we flip back to the intraday basis, this should continue a bounce. I believe we do fill this gap around the 42-43 area. That is my first major level of resistance that I see Upstart getting to and recapturing, and that'll be a significant profit. That would be a tremendous profit for us. You know, that would be another 31% on Upstart after we just banked 16% already on the trade. So excellent job if you've taken that trade. We were also very busy in the trade room today. We shorted a bunch of different names, and or two different names we also shorted, and we also started adding to other positions. We were very active today, as I do think going long and accumulating small positions gives us a chance to capture that bounce. So looking at CNQ here, one of the reasons why we shorted CNQ at the 60.43 mark, basically I was watching this bear flag pattern break. And then also part of this bear flag pattern that triggered is you have this topping formation. You can argue that this is your left shoulder. I'll just actually draw it in. This is your left shoulder. This is your head. And this is your right shoulder. And then you had your neckline, which is this pink line, running through your left shoulder and your right shoulder pivot low. And this is your breakdown point. So the head and shoulders has triggered, and you actually did confirm lower with volume on this pattern. So just a simple measured move. If you take the high end of this pivot high to the neckline, carry it over to where the original break in the neckline happened, that shows you that you should have a move down to this 50-50 area, which puts you into this major support area, this original bull flag zone before you broke out. And it also coincides with the low range of this parallel channel. So I think there's a strong probability. And the reason we shorted intraday is because if we look at it intraday, we shorted it when it had this retrace back to the neckline. So intraday basis, this stock was actually rallying up. It ran all the way up into the neckline. And then I wanted to see if it started pulling off the neckline. And we got a small pull off the neckline, so I started executing the short at 60.43. And look at this. It's already in the money for us, and I think this stock has plenty of downside action and highly probable action. And the thing about it is, even if the markets get a bounce, I think this favors I think this stock can still go lower as the markets or the S&P rise, just due to the fact that look at this exceptional run CNQ has had off of the lows. That's gone pretty parabolic, and the fact that our topping pattern is pretty much near the highs of this chart just makes me that much more confident in the trade. What else can I go over? I'm just going to take a quick peek through all of the issues. Let's take a look at SOFI, because SOFI reported earnings today. SOFI, I was actually very impressed with earnings. Basically, the stock was halted all day as there was a leakage of early earnings. Somehow there was human error involved and earnings were leaked early. Nonetheless, the stock was selling off all day. Finally, when it opened around 2:30, earnings were released and it had a double beat on earnings. It did give a little bit of weak guidance, but the fact that this stock is so oversold, it just makes it a tremendous bounce opportunity. We are out of the money right now, but our average is 609. I still think, due to the fact that you haven't had a bounce yet, of real significance. You've made a new low on the charts. You're so oversold. I mean, to think that this stock was trading at the highs of 28 and is now a what is it, a $5.25 stock, or $5.42 stock after hours prints, a $5.42 stock, just shows you that it has a tremendous opportunity to bounce. Notice on this occasion, 1, 2, 3, 4, 5 different occasions, we've had a 25 to 30% bounce at the very least, and this is at a way lower point in the charts, so a 25 to 30% bounce is really nothing in comparison to what this stock usually mean reverts to. It usually has a mean reversion back to the 50-day moving average. Even if it mean reverts back to that, it still is in a technical downtrend, but we are just playing the amazing potential for it to pop. SOFI still is producing earnings, revenue, and profit, as you can see from a double beat on earnings. So it just shows you that even though we're entering a slowing down climate, you still need to pick companies that are pulling off double beats, having decent guidance, have a good business model carrying into the future. Because imagine if all the stocks that are having poor earnings, there's no room in people's portfolio anymore for stocks that aren't, proving to have good earnings or profit or revenue. But let's just take a look at the price action here. We added to SOFI at 511 here, and it's beautiful. It's rallied from that addition in our portfolio. It's rallied 6%, so that's exactly what you want to see. We also bought Palantir today, PLTR. Palantir, I guess aftermarket it had a little bit of a dump, and then it's actually gapped up higher. So that's very interesting price action. So you can see it had this massive dump, probably we're shaking out some stops. Our average is 706, and then it looked, it gapped all the way back up, completely negating that red bar, and now it's closed at 726. So we are in the money on that trade. I think the short-term resistance is getting to this 771 mark. If we get through 771, then we test this 840 level. Once we get through 840, 953, I am a firm believer that we do fill this gap at the 953 area at some point in time. It will coincide with the markets having a bounce. Just looking at the support where we've tagged, it's really interesting that you have this pivot low, and now this pivot low, all connecting into a beautiful downsloping trend line, which you have tagged. It's a thing of beauty to exact proportion. Let's take a look at SLV. So SLV, we did add to our SLV today. Oh, that's SLC. SLV. This chart's a little bit messy. So SLV broke this double bottom zone. Now this is a new trading range that we haven't traded in since July of last year. It's a pretty exceptional drop in SLV. This comes on the back of a recession basically starting, which will inhibit the industrial demand for silver. So silver currently is now broken this key zone that you were consolidating above. I think the next level is you have this gap window that may be some minor intraday support, but ultimately it looks like you want to fill this gap around the 1850 level. This will be a huge level, 1850. We will be a big buyer. We have a very small position still in silver. I'm prepared to take silver up to upwards of 8% of our portfolio. I think we're sitting at 2.5%. So I may consider adding more at this 1944 level, or I might just do a bigger add that'll accumulate two of the buy levels into this 1858 area, or just slightly before, just so that we do get the trade filled. So silver is looking more and more attractive. It is getting oversold. The fact that silver's coming in this hard is truly exceptional. It's going to be a great buying opportunity, because once that economic policy period does change as well, silver will have a fire under its butt, being that it does have that precious metals inflationary safe haven behind it. But the industrial demand due to the recession is clearly impacting silver. Let's take a look at Tdoc. TDOC, we are swinging TDOC. Right now we are slightly out of the money. We were in the money at some point in the day, but the fact that you are putting in this bullish consolidation, it also looks to be a little bit of a cup and handle formation. We'll have to see if this neckline breaks If we do get a close and break above that neckline, we simply will have a measured move of going from this low to the break in the neckline of potentially into these highs here. So that would make sense for a move into resistance around the 34 mark. That would significantly put us in the money on the trade, well over 12-13% on the trade that we will make. I do think in terms of a max upside that I see this going if the markets catch the bounce. This gap fill up here looks really enticing to me. This is where you originally bounced up and now you've had that retrace back to this double bottom, but you pierced the double bottom briefly, made a new low, and the charts now can look to take out these highs on the chart. Whether or not we stay in the trade this long, it'll come based on the market sentiment and how the S&P and the major indexes are looking at any specific time. But I'm looking to really sell these rallies quickly because we've seen that they're not lasting at all. Let's take a look at AFRM. AFRM has been trounced on the back of weak companies in its earnings. I think who was the company that had the nasty earnings? Oh, it was Upstart. Sorry, so Upstart, had the nasty earnings, so it was more of a follow through in the industry because it's very similar in nature to what its business model offers. But I think Affirm is a little bit more of a quality company compared to Upstart, although you have to be very careful of the fact that they're not earning any real profit yet. They're not profitable companies. So whenever a company is not profitable in a falling market, they are generally the ones that get hit the most. Doesn't mean they won't bounce, but you just have to be a little bit more conservative. Eventually everything does catch a bid at some point. But look at this move down, basically from this $50, 51 area all the way down to $16 without having a bounce. We're talking about a 67% move down since the start of April, end of March. That is an incredible amount of destruction that has occurred. Now simply, where do I think we can mean revert back to? I think the likely scenario, well, you have two. You have this trend line, this downsloping trend line, which you broke and triggered. I think that's a very, very plausible and high probability outcome. Once you get through that, then your secondary one is going to be this pink trend line up there, which would be a 56% move off the lows. Still, this stock is exceptionally oversold. When you think about where Affirm was trading to where it's now trading, at some point these valuations do get attractive to fund managers, and at some point portfolios do have to take on risk to eventually make and reward their longer term investors. So Affirm, I think, will be a great trade. We're slightly just out of the money. It looks like we closed flat on Affirm. If we take a look at Mosaic, that was another one we're shorting today. So let's take a look at Mosaic. We covered that short today. Oh no, sorry, we added to our short today. Similar pattern to C and Q. You also have, you're at the all-time highs on this chart, and you have this topping formation. You have a left shoulder here, the head, and the right shoulder. You triggered the head and shoulders pattern by breaking through the neckline here. And it's weird because you kind of have two left shoulders that you can go by. So you have that one, you also have that left shoulder, and then your head, and then your right shoulder. So you kind of can draw two necklines for double confirmation. And this is your first neckline connecting your low pivot left shoulder to your right pivot shoulder here and your breakdown bar. And then you have your left shoulder pivot with your right shoulder pivot again. And again, you had that breakdown through both key necklines. And one of the reasons why I shorted on the first neckline is because this topping formation, I've seen many of these play out, and this is nasty. The fact that this topping formation is occurring near the highs of the chart after this stock has had, look at this run up. If you think we are heading into a recession, stocks like these get eaten up. I think you mean revert back to this yellow trend at the very least once you break this pattern. Let's just see, out of curiosity, where this pattern takes us in terms of a downside move. Let's use the bottom one. And a measured move would basically take us right into the 200 at the moment, but right into this upsloping yellow trend line. And my trend line could be off by a little bit, a few dollars here or there, but you're right into that support area. So that's very, very interesting to myself. And the reason we shorted was because you had the initial breakdown, and I was waiting for this. Sorry, I'll just put all those back. I was waiting for the initial breakdown to occur, which happened, and then you usually get a retrace back to the neckline. So there is a chance we could push up to the first neckline here. I may or may not. I may wait for this gap fill if we get through the second neckline. I may wait for this gap fill to add to the position. But I do think the downside will eventually start to occur, even if the markets catch a bounce. I think that's it. Wraps it up for tonight. Stay ready for the inflation data tomorrow. I think we get it around 8:30 in the morning, so that's pre-market time. Markets will certainly be moving on that news, and as well as the Fed speech all throughout the day. We'll be having that to really guide us and navigate through these choppy days. And then there's also some other economic data that comes out Thursday. I think payrolls come out, or I might be mistaken. I'll have to take a look at my list to see, but there's just so much going on. But be ready. I think a lot of our longs can bounce. I didn't really touch on natural gas today. Essentially, natural gas obviously had a bounce off of that key support that we were looking for. I still think we come up all the way into this zone to make that right shoulder formation, just like natural gas had here. You had this head and shoulders formation, left shoulder, right, and then head, and then right shoulder, and then you had this epic collapse. You could be putting in that for natural gas. I do think we have a defined top for natural gas. So that being said, it could have a little more upside. Notice how you retraced. If we flip to the daily here, you retrace back to the scene of the crime here. You closed above that level of resistance, which now is support, and it looks like you're pushing in the futures market a little bit higher. Again, you probably do have upside to around these pivots to look for that right shoulder curling over type of move. Sorry, my line is pretty pathetic there, but you get the gist of it. That's the kind of pattern that I'm looking for. I do think natural gas has put in its cycle top based off of the fact that you have this nasty weekly topping tail here, as well as here, keeping the price in check. And it'll be interesting to see what the inventory numbers come out for natural gas tomorrow alongside with oil. Oil has been getting crushed. You can see we almost hit the top of that range, and now it looks like we're testing the low range. This level of support, we've seen it hit once, twice. The third time might not be so lucky, and it could send us to break down to this $90 level, which will be your next intermediate support zone. But I do think we have a solid chance of breaking through this lower boundary range if we get down to this in the next week or two. So stay tuned for more. Tomorrow will be a choppy, volatile session, but Trading Capital will keep guiding you through these crazy markets. We just slowly keep accumulating positions for this potential bounce in the markets. We do own quality companies at severely discounted prices. Every single metric, every single company that we own has now been discounted substantially to the point where I think it's been discounted too quickly for how far along we are in this market cycle. Thank you for everyone